My next few stories are stocks of interest. Stocks of interest. I always find every week stocks that catch my attention. Netflix. Netflix soars, stocks rise towards a record close, longest win streak in 2.5 years. Shares of Netflix tacked on 0.2% in afternoon trading, and that was on June 23rd, putting it on track for another record close as the streaming video giant gets a double boost from a rally in the broader stock market, especially in large capitalization technical stocks and the recent surge in COVID-19 cases in the U.S. This is a stock that I've been looking at in a whole streaming list. I've got a streaming wars watch list because as people were put into a situation where they were kept at home, you would think that streaming stocks would go up. And Netflix is still the big boy. Everybody is still trying to catch Netflix, whether it's Apple, whether it's Amazon, whether it's Disney. They're all running after Netflix. Netflix is still the big boy in this industry. So Netflix is rocking and rolling, hitting all-time highs. We're going to take a look at that in our watch list. Here's another one. Because of COVID-19, Apple is closing 7 Apple stores in Texas. Wow, 7, that's going to be big, and that's going to affect the stock. Apple is closing 7 of its Apple stores in Texas as a response to COVID-19 flare-up in the state. The Cupertino tech giant had begun reopening select U.S. retail locations in May with new social distancing and hygiene measures. Apple shuttered all of its U.S. locations due to COVID-19 in March and slowly but surely opening up. All right, so we're going to take a look at how that is affecting the stock. Next one, this is an interesting story. Lazy Boy to restart production. Manufacturing will resume at partial capacity to fill backlogs. Think about it. And this is something that's been going on in my house. My wife has been buying up all kinds of stuff to put into the house, whether it's a new rug, a new this, a new that. You think about it, a lot of people who may be at home have been looking to do a lot of stuff at home. And Lazy Boy starting up production again, that could be huge for their business. Lazy Boy will begin resumption of production at several of its U.S. plants on Monday, operating at partial capacity for now. Lazy Boy had closed its manufacturing facilities and company-owned Lazy Boy Furniture Gallery stores at the end of March in response to COVID pandemic. Initial production will work through Lazy Boy's existing backlog. Imagine how much stuff they must have backlog from people wanting to do things. And then they're going to produce goods to service the expected demand. So it's probably going to take a little while for that to come back, but I think that could be a definite spike in that stock's price. Another one, Disney. Disneyland reopening delayed as U.S. coronavirus cases mount. It's interesting about Disney. Remember I said in regards to the stream wars, but keep in mind Disney does more than just TV. The biggest part of what they do is probably their theme park. This is not Disney World. This is Disneyland. Walt Disney Company is delaying its reopening of its Disneyland resort. The company said Wednesday, postponing a crucial element of its plan to get back to the business following the months of closures. That could affect Disney big time. So they had plans on reopening. They did open up some of Disney World, but they had some things in place. You had to be in the park, but with a mask on. That kind of thing. So Disney is really probably probably the stream is helping to keep them up, but their other businesses, the main core businesses, have been definitely affected by COVID-19. My last story that we're going to talk about is the PayPal versus Square, both places where you get to pay for your services. As a DJ, I have both, so that as someone is hiring me to DJ a wedding or an event, they can pay me by way of PayPal or Square. Traders take their pick on high-flying payment stocks this year. And what we're going to do is we're going to look at the both of them. Let's go see which one is really better. All right, the story is here. Let's move past the story and let the VectorVest software really analyze which stock may be the better trade. All right, let's go to those stocks. Go back to my watch list. Netflix, Amazon. Did I have Amazon? Oh, Amazon was for a different story. I didn't put that story up, did I? I must have didn't. I missed it. That was for another. I missed that story. That's all right. I'm not going to use Amazon. We're going to use Square, Lazy Boy, Disney. Was that it? And Apple. All right. Let's analyze these stocks. Apple, slightly overvalued. Netflix, way over its value. Square, overvalued. Lazy Boy, nicely undervalued. Disney, overvalued. So that's just a basic understanding on which stocks are over or undervalued. By way of long-term price appreciation, looking at all of the stocks, how about Lazy Boy has got the best relative value at 1.43. Followed quickly behind that is Netflix at 1.42 and Apple at 1.22. Those are three out of the stocks that I'm looking at right now from these stories of interest that I wouldn't mind holding long term. Let's look at relative safety, the consistency and predictability of a company's financial performance. What has the best one? Apple. Apple has the best relative safety. Relative safety is also an indicator of risk. So out of this listing of stocks, Apple is the least riskiest, followed by Netflix at 1.36, and then followed by Lazy Boy at 1.19. We got a theme going here that those are the three best stocks so far. Let's go to relative timing. Which stocks are moving up the fastest out of these that I have up? Looks like Square is at 1.95, already moving up the fastest, followed then by Apple at 1.72. So as I look at these stocks of interest, I like Apple, I like Netflix, I like Square, and I like Lazy Boy. The only one that I'm not so keen on is Disney. Well, that makes sense. They're getting grossly affected by the coronavirus, and they have their parks closed. So out of these stocks of interest, Lazy Boy, RVRS RT, all above 1. Netflix, RVRS RT, all above 1. Apple, RVRS RT, all above 1. So Apple, Lazy Boy, and Netflix are the three best stocks in my listing of stocks of interest. Let's go take a look at them on a graph. All right, let's go to, they're all still highlighted. We analyzed them. Let's go take a look at them on a graph. There's Netflix, moving up nicely higher over the last 3 months. Not a ton of volatility. The stock was in a channel, broke out of the channel. Right now, over the last 2 days, pulled back a little bit, but currently above the 20-day exponential moving average. And the RT is above 1. Love the earnings per share on Netflix as well. I like that trade. Next one. Wow, Square looks beautiful. This is the epitome of what you want to see on a 3-month graph. You want to see the stock moving from the bottom left to the top right. Now, one thing I don't like about the stock is that the earnings per share is falling over the last 3 months. The stock is clearly above the 20-day exponential moving average. RT is clearly moving higher. The stock is moving higher. The stock's in an uptrend. Just be careful if you do pull the trigger on the stock because earnings per share is falling. If I'm looking to get into this stock, I'd probably go 12 cents higher than 106.36. That helps to ensure that I'm buying into a rising stock. The stock is at a current level of resistance that it hasn't been able to break through just quite yet. My next stock, Lazy Boy, a little bit more volatile, and actually the news will probably affect the stock going into the near future with its opening up of reproduction. But coming from the high that happened on 6/8 of 2020, Lazy Boy has been pulling back. Number one. Number two, the stock is currently below its 20-day exponential moving average. Number three, earnings is lower than it was 3 months ago. Number four, relative timing is pulling back. So even though it's a good story, I would definitely want to wait until the stock's price goes back above the 20-day exponential moving average before I pull the trigger on it. Or, you know that the story is out there. If you want to be a little bit more aggressive, you can pull the trigger now. My suggestion, though, would wait for some confirmation before you pull the trigger. All right? The next stock in this list is Disney. Disney's being affected by the closure of their parks. The story helps to add to it. Disney is falling. The stock is still in, just barely in an uptrend. The RT on Disney as of right now is at 1.01, just barely above the value telling me that the stock's in an uptrend. If it drops below the value of 1, Disney will officially be in a downtrend. Earnings per share is lower than it was 3 months ago. Beautiful. Another stock, there's Apple. What was the other one like that? Square. Apple and Square look beautiful on a graph. They look beautiful on a graph. Love that. What is not to love about Apple? RT moving higher, earnings moving higher, price above the 20-day exponential moving average. Is it too late to get into Apple? No. Currently, I would wait until the stock goes 12 cents higher than the most recent high of $372.38. 373, what did I just say? 337.38, add 12 cents to that. That would be a good entry price. But the stock is an amazingly looking stock, just like Square is an amazingly looking stock, except for I don't like earnings. Apple, on the other hand, has beautiful. Apple is just beautiful all the way around. Just makes me want to cry. I look at Apple and I go, holy smokes.
You forgot PayPal.
I forgot PayPal? Is it not in here? Oh, I didn't put it in here. Did I not?
Nope.
Well, there it is. All right, and there's PayPal. Real quick, analyze it, overvalued. Upside potential, not really there. Little less risky stock. Relative safety is above 1, and the stock is definitely in an uptrend. All right, let's go add PayPal to that list. Let's go see if I can find it real quick. Thank you for that, keeping me honest. 3-month graph. Where's PayPal? PayPal. Hey, pal, where you at? PayPal. PayPal looks good, too. Square and PayPal both look good. So let's do this. Remember that story was trying to figure out which one was the best? Let's highlight just those two. Upside potential, neither one of them have good upside potential. But PayPal is a safer stock than Square. And Square is moving up faster than PayPal. Both of them grow their earnings at a clip of double digits. Square grows their earnings at a clip of 17% a year. PayPal grows it at a clip of 15% a year. So if I had to make a decision between the two, let's go look at just those two on a graph. Put in a 3-month graph. Look at that 1-year graph on PayPal. I like that. Look at the earnings per share. A little jagged in RT, but man, look at that run up. Put this on a 3-month graph. Look at that run up, and you know something? Square, that's what makes the difference. Notice that the earnings per share on PayPal is higher than it was 3 months ago, whereas the earnings per share on Square are lower than it was 3 months ago. If I'm looking at these two companies, the better company, especially because the earnings per share, would be PayPal. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.